On August 20, 2026, a court in Shenzhen issued a first-instance judgment against Hui Ka Yan, the founder of China Evergrande. Once celebrated as one of China's richest entrepreneurs, he was sentenced to life imprisonment. His personal property was ordered confiscated, while Evergrande Group and its main property subsidiary received fines totaling more than 15 billion yuan. The company he built has already been liquidated and removed from the Hong Kong Stock Exchange. But this story did not begin with a court case. It began with a child in rural China, and a business lesson Hui would repeat until Evergrande became too large to control. Hui Ka Yan, also known by the Mandarin form of his name, Shu Jiayin, was born in 1958 in Tikang County, Henan. His family was poor. His mother died before he was 1 year old, and he was raised mainly by his grandmother. His life changed as China reopened a path into higher education. In 1978, Hui entered the Wuhan Institute of Iron and Steel to study metallurgy. After graduating, he was assigned to Wuyang Iron and Steel Company, where he spent 10 years and moved into management. It was a stable career inside the state industrial system. But in 1992, Hui left it behind and traveled south to Shenzhen, one of the centers of China's market reforms. He joined a trading company and later managed one of its subsidiaries. The move placed him inside a new economy, one driven less by state allocation and increasingly by private sales, urban growth, and property. In 1996, Hui left to establish his own property company in Guangzhou. The business that became Evergrande arrived just as private housing demand was accelerating. Its first development, Jinbi Garden, went on sale the following year. Evergrande's own history says the project used a simple strategy: smaller homes, low prices, and tight costs. It says 80 million yuan of apartments sold within 2 hours. That figure comes from the company's account of its origin story. But the lesson is clear. Sell quickly. Collect cash early. Move immediately to the next development. For Hui, speed was not merely a sales technique. It became the operating system for an empire. Evergrande expanded the same formula across China. New projects created new presales. Presales brought in deposits and advance payments before homes were completed. That cash supported construction and helped the company keep expanding. Borrowing added more fuel. Suppliers and contractors also extended credit while waiting to be paid. As long as homes kept selling and new financing remained available, the machine could keep moving. Evergrande listed in Hong Kong in 2009 and gained greater access to offshore capital. By 2020, it reported contracted property sales above 720 billion yuan and cash collections above 650 billion. Those were the figures presented at the time. We now know that the company's reported financial performance during this period could not be taken at face value. When the crisis arrived, Evergrande became known as the developer with more than $300 billion of debt. That shorthand hides the people behind the number. At the end of 2022, the group reported total liabilities of about 2.44 trillion yuan. Borrowings were roughly 612 billion. Only part of the total. More than 1 trillion yuan sat in trade and other payables, including the construction and supplier chain. Another 721 billion appeared as contract liabilities, much of it connected to property development. Evergrande did not simply owe banks and bondholders. It owed a building system, and it still owed homes. In 2020, Chinese regulators introduced financing restrictions known as the 3 red lines. Developers whose debt, equity, and cash buffers failed the tests faced limits on how quickly they could borrow more. The rules did not create Evergrande's dependence on fresh cash. They exposed it. Property sales weakened, refinancing became harder, and obligations kept arriving. By December 2021, Evergrande said it could not guarantee that it had enough money to meet its commitments. Days later, S&P Global Ratings classified the company and a related entity as being in selective default after offshore interest payments were missed. The fastest property machine in China was losing the one thing it could not operate without: confidence. At first, Evergrande's collapse looked like the familiar story of a company that borrowed too much and expanded too quickly. Regulatory investigations changed that story. In 2026, Hong Kong's Securities and Futures Commission concluded that Evergrande had overstated audited revenue by more than 213 billion yuan in 2019 and more than 350 billion in 2020. The company had reported profits of more than 30 billion yuan in each of those years. The regulator concluded that both years should instead have shown losses. This was not a small correction at the edge of the accounts. Revenue from property sales had been recognized before the homes were completed and delivered. The financial picture shown to investors was fundamentally different from the underlying business. Evergrande's offshore restructuring never produced a workable rescue. In January 2024, the Hong Kong High Court ordered the listed parent company wound up. In August 2025, its shares were removed from the exchange. Then came the 2026 first instance criminal judgment. The court said Hui and the companies had used sustained, large-scale financial fraud between 2016 and 2021 to inflate assets and conceal liabilities alongside other financial crimes. The empire Hui Ka Yan created had reached its legal conclusion. Its economic consequences had not. Regulation did not create Evergrande's fragile business model. It removed the room that allowed it to keep expanding and exposed financial statements that regulators later found were false. Hui Ka Yan's personal story now has a dramatic legal ending, but liquidating one Hong Kong company could not automatically finish homes, control thousands of related entities, or decide who would recover their money. That is the second half of this story. When Evergrande collapsed, who actually paid for it? Was Evergrande destroyed by tighter regulation, or was the business already impossible to save? Tell us what you think. So there you have it. That's what it turns out to be. If this answered a question you didn't know you had, hit subscribe so you don't miss the next one. And if you liked it, tap that like button. Turns out, it actually helps a lot.